Alibaba has been on the fire these past couple of days, with a whopping 9.6% surge in just 2 days.
Later.
And maybe you wanna know why? Well, it turns out that Jack Ma and Zhou Cai decided to up their game and buy more Alibaba stocks. Now, hold up a minute. Wasn't Jack Ma supposed to be selling his shares? How about he decided to buy more stocks? Talk about plot twist, right? Seriously, it's like a joke. But my friend, here's the deal. As of right now, it looks like Jack Ma's plan to sell his shares in the future hasn't been put into action yet. Instead, he's throwing some serious cash into buying even more Alibaba stocks. In the fourth quarter of 2023, this dude dropped a cool $50 million on Alibaba shares, surpassing the 0.3% reported at the end of 2021. Now, does that mean Alibaba is all good and steady? Well, stay tuned, because there's more to the story. You see, normally when someone owns less than 5% of company's shares, they don't have to publicly disclose any changes in their holdings, right? Technically, they don't have to say a word. But guess what? Both Jack Ma and Zhou Cai are way too important in the Alibaba world for that kind of a secrecy. Every little move they make can send stock waves through the stock market. So, what does it mean for our regular folks during this turbulent time when Alibaba stock keeps dropping? And what to do with Jack Ma and Zhou Cai buying more shares? Well, what's their end game? And should we, our everyday investors, consider jumping to buying their stocks with them? Well, my friend, in today's video, I'm gonna answer all of these burning questions for you. I'm Sheila Wang. If you don't want to miss any important and hottest business and investment insights, make sure to smash that like button and subscribe my channel. And hey, I'm all ear for your thoughts in the comment section below. And if you are hungry for a more in-depth investing report, check out the link to my analysis report down below. Now, what you are waiting for, let's dive into today's topic. What does this holdings really mean? So, we all know that when a company keeps buying back its own stocks, it's a sign that they have confidence in their future growth, right? According to insiders, Jack Ma and Zhou Cai together now own more shares than SoftBank. Over the past couple of years, SoftBank, under the control of Masayoshi Son, has been reducing their stake through forward contracts. They went from holding around 7% in December 2022 to about 2% in March last year, and by May it dropped to less than 0.5%. And guess who's taken over as Alibaba's largest shareholder? That's right, Jack Ma has surpassed SoftBank. The recent surge in stock price is like a big confidence booster aimed at turning things around. And here's the kicker. Alibaba Group itself has been buying back its own shares too. In January 2024, they announced that over 12 months period ending on December 31, 2023, they spent a whopping 9.5 billion, which around 68 billion yuan, to repurchase a total of 897.9 million common shares. Alibaba has been the most aggressive among Chinese internet companies when it comes to buybacks in the past year. Considering the overall slump in Chinese stocks over the past 3 years, this move by Alibaba is quite heartwarming, right? So there you have it, folks. These holdings and buybacks are sending a strong message to the market and showing Alibaba's determination to regain confidence and push forward. It's gonna be interesting to see how it all unfolds. Here comes to the investor tips part. Should we ordinary investors follow Jack Ma's step? I personally think that a few big Chinese concept stocks are currently undervalued. I mean, look at the past 3 months, man. They've been beaten down like crazy, driven by all this emotional roller coaster. Take Alibaba, for example. I checked its PE ratio, and it's about 10, and the PB ratio is around 1.3. It seems like it's not a tech company valuation, my friend. Sure, we can come up with reasons for this job, like PDD's impacts or slower growth compared to before. But guess what? US companies also have their fair share of problems, right? Now, generally speaking, when major shareholders increase their holdings, it's like a sign. But here's the thing. Retail investors need to understand one crucial point. These big shareholders like Jack Ma and Zhou Sai, they have many ways to run money, right? They don't need to make money on every single trade. They just need to identify the bottom zoo. But we average investors have a limited fund. That's most biggest different part. And let's come to the $150 million. For someone like Jack Ma, that kind of money doesn't affect his daily life or other investment decision, right? He can handle it. But general investors are different. They have limited funds and feel the pain when they get stock. Plus, due to lack of trading experience, they often make the mistake of buying high and selling low. So this news about major shareholders increasing their holdings is a good sign. But my general recommendation is for retail investors to engage in bottom fishing with regular investment. Building a pyramid style position, that will be good. But even with this advice, there's a chance you will run out of the bullets before the opportunity fully presents itself. Not to mention, many people can't resist the urge to consistently gamble with their trades. Another strategy worth considering is waiting for the big player to make a few moves before jumping in. Now, some might ask, but what if the stock skyrockets just after 1 month by the big players? What can we do? In that case, you just pretend that opportunity doesn't exist, my friend. A trading strategy has multiple conditions and it inevitably filters out some opportunity but also help avoid losses. Sometimes people regret why they didn't seize this obvious opportunity in the past. But the truth is, those opportunities wasn't meant for them. For me, I will continue holding my Chinese concept stocks. And I won't be adding my position here. I'm gonna keep waiting, my friend. Here comes the expectation part. The Wild West era is over, and we're geared up for a brand new era. In a nutshell, the game might be the same, but the players have changed, my friend. We got some rising stars like Pinduoduo, PDD, as we know, and TikTok, right? Giving Alibaba a run for its money in different views. This new competition landscape, we kind of have an idea that Alibaba is hustle to make some quick adjustment here. If you would like to know the detailed into about how Alibaba changed and want to get the first hand of their feedbacks to those changes, as well as the latest trend of e-commerce platform, you can check my analysis report below. And that's past competition. Let's forget about 2023, because it's history. In the 2024, we're starting fresh with new challenges. This year, the competition in the e-commerce market is gonna get even fiercer. Taobao isn't gonna have an easy ride. The e-commerce world is filled with experts. Pinduoduo has a solid hold on customers' mind when it comes to low prices, and they're growing like crazy. On January 15th, 2024, Douyin e-commerce released their annual report, revealing that their platform's GMV has grown by over 80% in the past year. Douyin e-commerce platform is rising very quickly, and they can't be underestimated. And if you are interested about ByteDance TikTok company, you can turn to my latest video I posted before. In 2023, low prices was the name of the game in the e-commerce industry. During last year's single day, Double 11, Taobao and Tmall made the lowest price across the whole web. All in all, the only constant in the e-commerce industry is change, my friends. Now, Taobao Group, under the leadership of Wu Yongming, has gone through a massive organizational structuring and is all fired up. In 2024, can Taobao Group surprise the market and regain its former glory? We will just have to wait and see. That's all for today, my friend. See you next time.